Some mixed closes on Monday. Joining us to visit about that is Sean Hackett with Hackett Financial Advisors. Well, let's dig into the grain complex. Feed grains lower, soybeans to the plus side. The corn market seemed to respond to some of these rains that we got over the weekend.
For sure. I mean, came in on tonight, last night, and saw that a lot more rainfall fell in some really key corn growing areas. That's going to increase ratings, kick the can down the road a little while. There's some heat coming in the next 2 weeks, but with this moisture, we can handle that for a little while before that starts to deteriorate crop conditions. So that was really a blow to the corn market and even to the spring wheat market, which did also got some good rains in a lot of places at this point. So.
Yeah, absolutely. They certainly traded together today. The December corn futures, how much technical damage have we done to that market now?
I'm really eyeing the 660 level on December corn. We did close below 660 on a daily basis, but I view the weekly close far more important. As you know, at the end of this week, it's the month end, quarter end. I think that's going to have a lot to do with what the corn market's really thinking. If we close below 660 at the end of the week, I would be pretty nervous that the corn market might have a lot more downside to go here.
Yeah.
So,
although we did see the bull spread still working there, so the cash market's still kind of trying to support that July, right?
Well, yeah, it's kind of a situation. We have plenty of supply in the futures market from speculators selling, but we still don't have a lot of physical corn supply. I think that's the bifurcation we're seeing and why those bull spreads have been working, because we're saying we might have big supply. The speculators are worried and selling, but quite frankly, in the nearby, we're still very, very tight in the market.
So did wheat just follow corn, or are we still seeing harvest pressure?
I mean, obviously, wheat always will follow corn to some extent, but I really think this particular time of the year, it's harvest pressure from the U.S. harvest, and it's expected harvest pressure from the Russia harvest. And the latest numbers we've seen from some of the analysts out in Europe, they're looking at 90 million metric tons, Michelle, which would be an all-time record crop. And Russia is talking about lowering some of their export taxes. So that's just another reason to be bearish short-term in the winter wheat complex.
We've also done technical damage in all three exchanges there, though. We're like below the 100-day now in all three, aren't we?
Yeah, I mean, look, the technical picture does not look good on a short-term basis. But at some point, even, as bad as a technical can look, there can still be some pretty substantial rebound retracements and that sort of thing. And I think we're getting to the point we've seen such a decline with a big report on Thursday, sell the rumor, buy the news, heat coming in the next few weeks. I just have a sneaky suspicion we might be set up for some short covering here into the end of the week. That's my suspicion right now, despite how bearish the technicals appear on a short-term basis.
Yeah, no doubt. What about the soybean market? It looked like we kind of bounced off some support finally there, but we were so oversold after over a buck drop last week in November, weren't we?
Yeah, weather's still not that critical. You need to get into late July, look at the August weather. We still have a long way to go before we can say we're going to have a big soybean crop. Demand for soybeans is still strong. Biodiesel, renewable diesel still needs a lot of bean oil. So I just think the market got a little carried away. Who knows what they're going to say on Thursday? But once again, we know that Thursday's reports, which is the quarterly grain stocks report and the acreage report, have tended to be one of the most volatile report days of the year. I'm not sure anyone who's seen substantial profits being short doesn't want to take some chips off the table ahead of that report right now.
Although we had a big sell-off last week in this market, and so some of that is already kind of tempered as we go into these reports on Thursday, right?
Yeah, like I said, I think there's such bearish expectations already built up. It almost seems to me, it always doesn't matter what the USDA says. Whatever they say, the market's going to rally because it already factored in or over-factored in. If we actually got a bullish surprise, Michelle, then you could have something. You could have a pretty wild boomerang if we got some kind of a bullish number that the market completely gets blindsided. And by the way, it is not unusual for the consensus to get blindsided on this report. It actually happens more often than not.
Yeah, no doubt. And then end of month and end of the quarter, add that in, like you said, lots of volatility. So let's talk about this cattle market. Cattle on feed report placement number was not as bearish as expected. And we do look like cash trade maybe could hold together here this week. So what are you thinking? Are we going to be able to continue to hold this market intact or not?
Well, that was the first cattle on feed report I can recall in months that wasn't outright bearish. So it wasn't bullish. I wouldn't say it was like a pound table bullish report, but at least it wasn't outright bearish. So maybe we're shifting the tide here in this cattle on feed supply, and that the market's going to start anticipating this shortness of animals that we've been talking about coming. And I think the cash market can hang in there, especially with the corn price coming down, the feeder cattle continuing to catch a good bit. I think we might have turned a corner here from a few weeks back. We had that big reversal day, reversal week. I kind of like the cattle market here. I think we're actually looking better than many markets at this point.
Yeah, well, 98% placement is lower than we've seen for a long time, as you suggest. We also have weights that have come down here as well. So we've got to be starting to get into a little bit of that tighter production, don't we?
Undoubtedly. Unquestionably, we're starting to see that, it's supply and demand. We always focus on supply or demand, but if you look at both of them, I think both are going to be constructive and say that we're not going to have enough animals for the demand that's out there, even with recession fears at current prices, and we're going to need to bid this market up to adequately reflect that.
Hogs ended lower on the day. Is the market feeling like the cash is starting to top, or is this just typical squaring here ahead of quarterly report coming up on Wednesday?
I think it's squaring at this time, at this moment, with this report coming out. It's a lot of squaring going on. The bigger thing for me is that, in the cattle market, exports are additive. We don't really need them, but in the hog market, we really need exports if we're going to equilibrate our market. And the Chinese continue to be absent. We think they'll come back into the market later in the year, but until they do, we're still struggling to find a way to make the hog market work. And I still think that's going to be every rally is going to be met by that issue until we see something change there. And that would mean like getting China reopened again would help, I think, on that side of the equation.
So what do you think, Sean? Just about every hogs and pigs report we've had for a number of quarters has showed contraction in this herd. Could this be the last one that we see that contraction in or not?
Well, it's kind of weird. Like we just talked about in the cattle, we finally saw something that was less bearish. I'm thinking we might finally see something in the hogs and pig report that might be less bullish, a transition to a bigger supply outlook going forward. So I would be thinking this might be the first report that we actually have something bearish to talk about. May not be an outright table pounding bearish report, but something less bullish than we've seen. I'm thinking that's what we're going to see on Wednesday. So
appreciate your time as always, Sean Hackett with Hackett Financial Advisors. That's your markets here on agweb.com.